Hey everyone, welcome back to another explainer. I am absolutely thrilled you're joining me today because, well, we're going to uncover a hidden financial reward that honestly, so many hardworking professionals completely overlook. It's this benefit designed to reward your loyalty, but, because it's wrapped up in a bunch of tax code jargon, it just kind of gets ignored until it's way too late. So today, we're unfolding the gratuity treasure map. By the end of this explainer, you're going to know exactly how to track down, calculate, and actually claim this hidden salary benefit.
Okay, let's dive right into this. Have you ever stopped to think that just by handing in your resignation letter at the wrong time, you might be accidentally walking away from a literal mountain of tax-free money? No, seriously, it happens every single day. People switch jobs for this tiny pay bump, completely unaware that they've just reset a massively lucrative hidden loyalty clock. Today, we're going to make absolutely sure that never happens to you.
So here's our roadmap for today. We're going to cover the hidden salary benefit, the 5-year loyalty rule, government versus private sector, covered versus uncovered companies, calculating your gratuity, and finally, job hopping and gratuity. Let's break this down.
All right, Section 1, the hidden salary benefit. What exactly is gratuity, and why on earth should you care? Okay, so gratuity isn't just part of your regular monthly paycheck. It's actually a specific, statutory monetary benefit given by your employer as a big thank you for your long-term service. It's governed by the Payment of Gratuity Act of 1972. You can think of it like a lump sum reward that gets triggered by major career milestones. We're talking superannuation, which really just means hitting retirement age, regular retirement, resignation, or, unfortunate events like death or disability. It's essentially a safety net and a loyalty bonus all rolled into one.
Now here's the crucial catch. You have to actually be eligible to unlock this money. First off, you've got to be a full-time employee drawing wages. If you're an apprentice or an intern, unfortunately you don't qualify for this one. But the absolute biggest hurdle here is the third requirement. You need a minimum of 5 years of continuous service with the exact same employer. Now, the law does have a heart, right? This strict 5-year rule is waived in tragic cases like death or disablement, but for your standard everyday career moves, that 5-year mark, that is your magic number.
And that brings us to Section 2, the 5-year loyalty rule. This is really the ultimate barrier you've got to understand. Let's imagine your gratuity is like planting a fruit tree. Year 1, you're literally just putting the seed in the dirt. Years 2, 3, and 4, you're watering it, it's growing, it's maturing, but it bears absolutely zero fruit. If you decide to pull that tree out of the ground at year 4.5 to take a shiny new job, well, the clock resets entirely at your new company. You harvest absolutely nothing. You have to make it to year 5, that vesting year, to finally harvest your financial reward.
Moving on to Section 3, government versus private sector. How much does the taxman actually get to keep?
Well, if you're a government employee working for the central or state government, defense, or civil services, congratulations, you've hit the jackpot. Your gratuity upon termination, retirement, or superannuation is fully 100% exempt from income tax. It is completely tax-free. But for the rest of us in the private sector, we've got to navigate a slightly different reality. The tax exemption here is capped, and it's subject to some very specific mathematical formulas.
But hey, there is some absolutely fantastic news for the private sector. I really want to highlight this number, 20 lakh rupees. Thanks to a recent amendment by the Central Board of Direct Taxes, the maximum tax exemption limit for private sector gratuity was literally doubled. It went from a ceiling of 10 lakhs all the way up to 20 lakhs. This is just a massive win for your long-term savings, because it means significantly more of your hard-earned loyalty bonus stays right in your pocket.
All right, let's jump into Section 4, covered vs. uncovered companies. This is where the math splits.
So within the private sector, the tax code takes 2 different paths depending on your company's size. If your company had 10 or more employees on any single day in the preceding 12 months, legally they are covered by the Act. In that scenario, your tax exemption uses a very specific fraction, 15 divided by 26 multiplied by your last drawn salary. But what if you work for, say, a tiny startup with fewer than 10 people? Well, they aren't legally forced to pay gratuity, but they totally still can. And if they do, you're not covered by the Act. The formula changes here. Instead of 15 over 26, it's just a 1 over 2 fraction, a half, and it uses your average salary over the last 10 months rather than just your final paycheck.
Next up, Section 5, calculating your gratuity. Let's make this real with a concrete example.
Okay, let's look at Rohan. Rohan works for a company covered by the Act. His last drawn salary, which, remember, includes basic pay plus dearness allowance, is exactly 1 lakh rupees per month.
Now, he's worked there for 19 years and 7 months. Here's a really cool hidden perk. Because 7 months is more than half a year, the tax code actually rounds his service up to a full 20 years. Pretty great, right? So we plug it into our covered formula. His salary of 1 lakh times 20 years times that magic fraction of 15/26. Run the numbers, and that gives us a calculated exemption amount of 11,053,846 rupees.
But wait, we are not quite done with the math. The Income Tax Act makes you run a quick 3-step test to find your final tax-free amount. First, you take that formula amount we just calculated, let's just call it 11.5 lakhs for now. Second, you look at the government's maximum cap, which, as we know, is 20 lakhs. Third, you look at the actual physical cash your employer handed you. Let's say they gave you exactly 11 lakhs. Step 4 is the golden rule here. Your exemption is the least of these 3 amounts. Since the 11 lakhs you actually received is the lowest number of the bunch, boom, that entire 11 lakhs is 100% tax-free. You pay 0 tax on it.
And finally, that brings us to Section 6, job hopping and gratuity. This is so relevant right now.
Look, in today's fast-paced world, staying at one company for 5 whole years can honestly feel like an eternity. But here is a vital piece of career advice. Changing jobs before completing those 5 continuous years means completely resetting your loyalty clock to 0. You lose all accumulated gratuity benefits for that entire period. If you're someone who hops to a new company every 3 or 4 years, you could honestly go your entire career without ever harvesting a single piece of fruit from your gratuity tree.
So I really want to leave you with this one thought. The very next time you're sitting at your desk, looking at an exciting new job offer from a competitor, ask yourself, is the slight pay bump in this new offer generous enough to cover the thousands or even lakhs of hidden tax-free gratuity that you're just leaving behind by resetting your clock? Always factor the gratuity treasure map into your long-term financial decisions. Thank you so much for joining me for this explainer. I really hope this helps you navigate your career and your finances with total clarity. Keep learning, keep planning, and I'll catch you in the next one.